But in terms of the Brexit negotiations, it's all quite clear. The Prime Minister's withdrawal agreement is going to be voted on next week. If that fails, then the default situation, as Parliament has approved, is for a no-deal scenario, which is effectively WTO terms. Now, in terms of single market access, as you're probably quite clear, only 6% of UK firms sell into the European single market. Naturally, that's very important for them. They're the big firms, they account for 12% of the economy. The likelihood and the inevitability, I would suggest, with a no-deal scenario is there will be sector-specific deals. People don't talk about this in the discussion. It's quite clear from the German side, you only need to listen to the debate in Germany, that if the UK were to go down what they call the WTO route, which we call the no-deal route, then the Germans are quite prepared to talk about sector-specific deals, certainly from their perspective about autos. The two sectors in the UK that are impacted the most by a no-deal scenario are the auto sector and the farming sector. On the positive side, the 94% of UK firms that do not sell into the single market would be expecting a more positive domestic regulatory and domestic tax agenda as a result of that scenario. So you need to look at both sides. Naturally, when you go from being in something for 40 years and changing, those firms who have their business model predicated on the current status quo will be those most worried about any change. So coming back to your question about Parliament, I think we're going to see raw politics in the next few weeks. And coming back to your initial question, what we're seeing is different people positioning themselves given that raw politics in the next fortnight.
You talk there about the impact on businesses of a move to WTO rules and a hard Brexit. But we've heard more broadly about financial economic consequences for the country from both the Governor of the Bank of England and the Chancellor over the last few months. And it's not been a very pretty picture they've painted. I just wonder, how can you, working in a wealth management firm, advocate a course of action, as you seem to have done in the recent months, that can't necessarily be advantageous to your clients?
Sorry, in terms of Netwealth, we've actually produced incredibly good performance, upper quartile. We manage funds passively in the discretionary wealth management world. We actually don't advise policymakers, we actually predict and analyse what's going to go on. Actually, the newspaper headlines here in the UK this morning are about record boom in UK city office space, which is indicative of what's happening here in London. The financial sector, and indeed most firms involved in the financial sector, have been positioning themselves for what they would see as the worst case scenario or the most difficult scenario for the last 2 years. So different firms are positioned and different sectors are positioned. The key issue that comes up from a UK perspective is that the UK economy needs to actually get three things right. Its domestic economic agenda, its positioning with the rest of the world, and its position with the EU. And clearly, in terms of its positioning with the EU, the likelihood is that we will have some sort of deal.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.